This is an ET Now exclusive in the run-up to Union Budget on 1st of February. We do understand that one of the proposals that has been looked at very seriously is to allow Indian insurance companies and Indian pension companies to invest in India's startup story, and that could be permitted via fund of funds, alternative investment funds. In fact, we are told that at one time, very recently, one of the proposals that was being very actively considered is should India set up a new alternative investment fund, a new AIF, in collaboration with pension companies as well as Indian insurance companies. The idea is fits in with a larger game plan of boosting domestic capital. As India wants to become Aatmanirbhar, self-reliant, it wants to boost domestic capital. Now, one of the quandaries before the government is that the taxation on private companies, on unlisted shares, is much higher than listed shares. So how do you get domestic capital to the startup ecosystem? And one of the ways being looked at, therefore, is the insurance and pension sector. In fact, this is not a new suggestion. It has been made before. The idea also being that globally, you have global pension funds which are allowed to participate in India's startup story. They're allowed to invest and partner with funds. So why aren't Indian pension funds allowed, like NPS? Even if you look at LIC, you're going to have the IPO of LIC, whether it is in this calendar year or the next calendar year. That is a stated objective. And before the IPO, we're being told the government is quite keen to have an allocation from LIC also for the startup ecosystem. In fact, we're being told that high-level meetings have also taken place between the finance ministry and all the concerned regulators, from the market regulator SEBI to the insurance regulator IRDAI, as well as the pension regulator, the PFRDA. We're also going to be joined by Siddharth Pai, the co-founder at 314 Capital, who will be giving us his expert views on boosting domestic capital, making the entire ecosystem Aatmanirbhar. Now, with the Chinese money being screened and not being permitted, there has been a greater apprehension of how to get domestic capital to this ecosystem. Siddharth Pai is with us. Siddharth, it's always a pleasure talking to you. Thanks so much. This is Nayantara Rai. This is not a new suggestion that insurance and pension companies should be allowed to participate in the startup story. In fact, the Jayant Sinha-led parliamentary committee had also made a similar suggestion. If I could get your initial reaction.
Happy to. So, Nayantara, I think this has been one of the biggest bugbears of the Indian startup ecosystem. The fact that rupee capital participation is not even 1/10 of the total amount of capital that Indian startups have actually raised. Indian startups raised $14.5 billion in the calendar year ending 2019. And in the calendar year ending 2020, in spite of the Chinese app, the China ban, in spite of COVID and everything, they've actually raised about $10 billion. Just 30% short of what they actually raised the previous year itself. But yet in this entire story, Indian capital has actually been lacking, and particularly Indian institutional capital. Indian startups have managed to attract capital, the likes of pension funds and insurance companies in the US and Australia and Canada and several other geographies. But yet no one's heard of an SBI, no one's heard of an LIC, our Indian pension funds, EPFO, anyone participating in any Indian venture capital funds, as well as Indian startups. And this has actually raised alarms across the entire world. And given the Prime Minister's clarion call for India to become self-reliant or Aatmanirbhar, and for that to happen, is imperative that the shackles and regulations that prohibit our Indian institutional capital from investing into funds and startups has to be rationalized, so that the floodgates of Indian capital can actually open and the Indian startup ecosystem can become self-reliant as well. Because one of the greatest problems arising from the lack of domestic capital is the fact that our brightest entrepreneurs are actually choosing to flip either to Singapore or the US. And this is as Sanjeev Bikhchandani has also raised. So one of the points that the entire ecosystem has been raising is the moment we have larger domestic capital participation, the need to actually flip to another jurisdiction actually reduces to a large extent, because growth capital avenues will be available within the country itself.
Latina, I want to ask you one question, which is that the current rules that you have in the country, let's talk about insurance first. They're not allowed to put in money if it's also going to go abroad, or there are overseas investors. There are very strict rules on that. So you're going to require a lot of changes. It's not just an announcement. It has to be followed up with a lot of paperwork too.
That's right. So that's actually one of the examples, Nayantara. There's Section 27E of the Insurance Act of 1938 or 1936, I believe, which specifically prohibits any amount of life insurance, the premiums paid by Indian insurance payers from actually leaving the country. And given the fact that Indian funds usually invest a small percentage of their total corpus outside the country itself, this has actually precluded a number of them from actually investing into Indian funds itself. And this has become particularly problematic in terms of actually raising domestic capital. If you look at the pension funds as well, under the EPR and the pension scheme, under the NPS, the ability to invest into category 3 funds is actually an option. But the fact that we've actually spoken to any of the officials, they've openly said that even though people have opted for this particular amount or this particular option, they haven't invested a single rupee into any of the category 3 funds because they haven't been able to find them, and they're not certain about the track record that they actually have. A large amount of these regulations were actually written in the 70s, 80s, and 90s, when the term startup wasn't even in vogue. And the entire world has actually dramatically changed since then, since the liberalization of India, and even over the last year itself. The need for digital services and the need for digital adoption is at an all-time high. And it's actually Indian innovation, Indian brains is actually powering a large amount of this. And in an era where the interest rates are actually at an all-time low, where the pension fund officials have also raised an alarm about the fact that they may not be able to pay back all the money, they may not be able to hit that particular rate of interest for all their subscribers as well. This actually goes to show that growth capital will actually add an added alpha to the entire portfolio itself, and the best deliverance of growth capital as well as growth has actually been venture capital funds as well as startups itself. So for the need of the entire nation, it's actually imperative just at the eve of this budget that the Honorable Finance Minister actually address these particular issues itself head on and make a statement and make a strong statement of policy and intent at the budget, and hopefully over the next few months that the regulations also follow suit as well. Because this government's done a large amount of work when it comes to reform, especially since the rise of COVID. It's important and imperative that the government actually rides this particular wave to ensure that the 2020s actually become the decade of India.
About pension, Siddharth, we've talked about insurance and what kind of enabling provisions and paperwork we'll need. Now, as far as pension goes, it's a very sensitive subject. You're dealing with people's life savings. It's what they've saved up for, for their older years. It's very, very sensitive. How can that be treated? Are we talking about a proposal which could allow the NPS to also invest in startups, which, let's face it, is risky? The failure rate is very high and the success rate is very low when it comes to startups. That may actually be true in some ways, but what we're speaking about right now is actually asset allocation. The pension funds for the life insurance, LIC itself actually has about 5 lakh crores of premium actually flowing through it on a yearly basis. NPS as well as sufficiently high amounts as well as EPFO. The entire industry is not asking for the government to start allowing them to invest 25 to 30% of their total annual cash flows into Indian startups or the Indian AF industry. That's never been the ask. But we're asking them to allow them to actually experiment up to a certain extent, maybe about 5% or a smaller extent itself, to dip their toes in this entire industry. And once they start building confidence, once the returns actually start flowing over there, then based on the merit, they can actually make a decision to actually allow them to invest larger. By giving them the allowance to invest into Indian AFs and Indian startups, it doesn't necessarily mean that all of them are actually going to take that. They are, of course, going to actually they're of course going to judge this on the basis of merit. They're going to judge this on the basis of the opportunity cost, as well as the inherent risk that actually arises as part of this. And India as well, the fund of funds has actually emerged as a very strong vehicle of diversification to ensure that even though the underlying portfolio company, a few of them may actually fall, on a risk-adjusted basis, taken into consideration the entire diversification that the fund of funds actually offers, that they will actually end up beating the market when it actually comes to returns. So the ability for them to experiment itself has actually been severely impaired. And that being said, it's important, as I said previously, the entire world is actually grappling with growth slowing. Your interest, if you look at the treasury yields across the entire world, negative interest yields across the entire world is about $18 to $19 trillion. India, thankfully, has been growing, but India's growth has also stuttered to a large extent. And now, in order for these particular funds to be able to generate alpha and to secure
and to actually secure the well-being of their subscribers. It's important for them to actually be able to diversify. We've seen this happen in the US as well in the 80s and 90s, when pension funds, when endowments, when large universities are investing into them. And now they've actually investing into venture capital funds as well as startups. And now you've seen them ride Google, you've seen them ride Apple, you've seen them ride the largest tech companies that have ever emerged. And now these endowments have become multi-billion endowments on the basis of this. The ability to experiment is actually going to be important, because in the state of flux the world is in as of now, generation of alphas actually comes at a huge premium. But venture capital funds as well as startups actually do offer this, and there are a variety of models that offer this on a risk-adjusted basis itself. So give this entire industry a chance. The rest of the world as he has, because even those same pension funds in the US, CalPERS, be it CalPERS, be it the Australia Super, or be it even in Canada as well, they have the exact same qualms and the exact same concerns. They're not just investing into a foreign country, they're also taking the currency risk that actually comes with that. That shows how bullish they actually are on the entire Indian story. And there are similarly various officials, various fund managers of EPFO and all these other aspects who've often told the industry that we would love to actually explore this, a smaller check just to start off the relationship. But unfortunately, the regulations don't actually allow us. So giving them the opportunity and giving them that option will actually go a long way in actually increasing the returns for their subscribers as well.
We can move on to another story that we at ET Now have broken. We did this on Monday, a day before Republic Day, which was that there is a good chance that Finance Minister Nirmala Sitharaman could say something about IPOs and startups, unicorns. The Prime Minister has already talked about direct listing overseas. We still don't know if there will be a mandatory secondary listing in India. That's something the Finance Minister will have to announce. Will it be with a grace period of 2 to 3 years? We also don't know whether it will be the underlying share which will be listed overseas. We are also being told they've looked at other hybrid structures as well. One could be a depository receipt. If I could get your reaction on that, it's one of the biggest asks of the startup ecosystem, and in a year where many IPOs are being planned, but unfortunately all of these IPOs of these startups have already flipped. They're no longer domiciled in India.
Right. That's actually, so this is you're actually right, Nanda. This has been a long-standing ask, because the flexibility to actually choose the jurisdiction of your listing where you could actually attract the highest premium and attract the largest volumes of capital will actually be beneficial for the entire nation as a whole itself. And we've actually seen the be it any of the recent IPOs, most of these IPOs have actually peaked right after the list. They usually enjoy a premium of anywhere between 20 to even 100% in certain cases. That just shows the volume and the appetite that these particular startups even have. And this is only in the Indian markets. We've seen this happen in the US, we've seen this happen in Singapore and various jurisdictions itself. The commercial call that a company can actually take in terms of capital raising is crucial for the growth of that particular company itself. That being said, I think the finance minister also has a very fine line to actually walk, because the finance minister and the government actually needs to balance the aspirations of the investors and the startups on one hand, as well as retail investors in India as well. Because the ability, in case any of these companies do actually list abroad, there needs to be a very clear set of protocols that will actually allow Indian investors, be it mutual funds, be it larger Indian financial institutional investors, or even retail investors, from actually participating in these particular stories itself. Right about now, the regulations around this in terms of FEMA, in terms of Companies Act, in terms of even the SEBI regulations as well, are actually none of this has actually fallen in place. There have been large rounds of deliberations that have been held by the various government ministries, along with several well-wishers, several entrepreneurs, and IBCA as well, the Indian Venture Capital Association. There have been these closed-door meetings, and there has been some amount of consensus that's been built around this as of now. But all the eyes are going to be on the finance minister to actually take this through and to actually balance the need of the Indian startups and entrepreneurs, as well as the Indian retail investors who actually want to participate in this story. This is how depository receipts, maybe actually asking for a secondary listing, all these options have actually been mooted, but it's actually left up to the finance ministry and the law ministry as well to actually set the stage for India to actually take its place among the capital markets of the world.
We are waiting for that, aren't we? We are being told that even if an announcement comes, there'll be a lot of paperwork that will need to be done post that, so it could be a couple of months. Satpa, it's always a pleasure talking to you. Thanks so much for joining us here on this edition of Startup Central. We're going to keep trying to break a lot of stories that we pick up could happen around budget, so maybe we'll have you on again before 1st of February. Well, with that, ladies and gentlemen, we're going to take a short commercial break. But stay tuned. A lot more coming up on the other side, including 2 unicorns. Stay tuned.